Perfect. Okay. Thanks.
Yeah. Yeah. So pretty much what we were saying was, it's all about having a system, right? And just a set of rules and, parameters, things that you follow, things that you look for every single time, right? Like if you could have a system, then you could pretty much trade accordingly. You don't really have to think anymore. You're kind of just anticipating, right? I always say we're anticipatory traders. Like we just anticipate certain things to take place, and then whenever they present themselves, we take advantage of that situation because it's what we were anticipating. And if it's not, then like we adjust and we identify a new range and all that stuff. But yeah, it's like if you can allow yourself to detach from outcomes prior to entering the trade, because again, most traders have a lot of anxiety, stress, and fear before entering the trade because it's, the fear of loss. Nobody really wants to lose. But accepting that as part of trading, right, with risk to reward, you can literally lose more trades than you win and still make more in terms of percentages than you lose. So that's kind of like the part where it's just, you let the numbers take over with your edge because, numbers don't really have emotions. There's just their numbers, right? So, these major banks, the biggest players, like they're all trading with AI, right? They're all trading with AI. So it's like those things don't have emotions. They just trade off of, algorithms and stuff like that. So it's really just creating that system that we follow to where we don't really have to think. We just execute when we see it, and having the discipline to not trade whenever it's not presenting itself. Right. So because a lot of times people may feel like, oh, I need to be in a trade. Like I need to be in a trade, but it's like, again, we're anticipatory traders. We wait for things to come to us and then we take advantage of that situation and we capitalize on it. So it's all about just identifying your previous areas of accumulation, previous areas of distribution, right? Your points of interest, your imbalance, liquidity that's been swept, liquidity that needs to be swept, your targets. I believe your targets are far more important than your entries. You got to know where you're going to pay yourself. You have to have a system to pay yourself, right? A trading plan, of course. So yeah, you guys already know the market cycle pretty much. This is pretty much the markets in a nutshell. Like it's just this, right? But down here, the market's coming down bearish, right? Creating lower lows and lower highs, and then it breaks structure, distributes, comes back down, reaccumulates, and then it continues in that bullish structure. And then above the highs, right, starts to consolidate, Whoa, I don't know why my Control Z is not working right now. It's kind of weird. Anyways, right, creates a high, breaks structure, and then redistribution. And then you're just targeting lower prices, previous areas of imbalance, and then you can wait for reaccumulation again. And above these highs, you can anticipate distribution, and it just repeats itself over and over again. Like, right, whenever it's bullish, at these higher lows, you're pretty much just waiting for what? You're waiting for reaccumulation, and then you just get in, and then you're targeting new highs. And vice versa. Whenever it's bearish and it comes into previous lower highs and fills an imbalance, you're waiting for redistribution and you're targeting new lows, right? Like I'm gonna say this, right? I truly believe that simplicity is like a secret. There's a lot of information out there and stuff that's kind of just put out to fill things or to confuse people, make people overcomplicate or overthink, because like thinking is very powerful. But a lot of times thinking can be like a waste of energy, right? It's like you're overthinking, you're like doubting, right? So I always say when in doubt, just stay out. You know what I mean? Like if you're not feeling too confident in like the trade, then like just don't even trade, right? Just wait for it to play out. And then next time when you see it, be like, okay, I'm not gonna pass this one up, right? So So yeah, and then just Chris, I think we should definitely share the let's go down the rabbit hole video with them.
Mhm. Yeah,
I
got it.
definitely, yeah. So you could post that in the Discord, in
Yeah.
your Discord if you haven't already.
Yeah, I can invite you in the Discord too if you want to.
Okay, bet. No, yeah, whatever you guys need, like I'm here, you know. I want you guys to know that I got you guys, and you know, I definitely have Dr. Abe for life, you know, Chris, as you know him. Yeah.
And let me know your feedback about the Discord, by the way, too. Nobody really gave me feedback yet, so I want to see you got what you think on the Discord. I just sent you an invite.
Right. But yeah, I mean, like we already went over this like on the previous call, so I mean, yeah, like it's the same thing at the highs, you know, the lows, like so I know like we were just on that call together, so like literally it's just like adjusting to whatever you're seeing in the markets, right? So if we are bearish, right, again, we know all of these lower highs, we're anticipating evidence of what? Redistribution, and we're targeting new lows, right? And every time we create a new low, you could anticipate evidence of what to take place.
Reaccumulation.
Yes, so it would be accumulation. And then this would be reaccumulation, and we would target the previous lower high and balance. And we would only short here if it showed evidence of what? Redistribution, right? So if it didn't and it broke this structure, then we're looking in here for price to come back and reaccumulate again, right? Now this is higher high, higher low, and then, you know, up here, price does what? In order for the retracement to start, it starts to distribute. It comes in a bearish counter trend, wait for a previous area of accumulation to see reaccumulation, and then you go target a new high, and then above this high, you can anticipate evidence of distribution, targeting this previous imbalance area of accumulation, right? And only going long here if it accumulates. And if it doesn't, well, then we just did what? We just, you know, accumulated to distribute, right? You see that there's a curve again, right? I really don't understand why my control Z isn't working, but it's figured out. And I just erased the wrong thing. I forgot there's this button right here. Right, because now, oh, I gotta do this. All right. So now it's like, okay, this is distributed. So now this is liquidity that got swept, previous area of distribution. We created a new low. We could anticipate accumulation and reaccumulation to go long into this previous imbalance, right? Because this is a whole entire push up before it broke structure. So now we could, our targets are important, right? Because this is how you can play ping pong, right? Like you don't want to marry a trade or even be like, okay, yeah, knowing that, okay, it just literally distributed here. I'm going to buy it and I'm going to target like some place like up here. Like that just doesn't make sense, right? You want to target places that really make sense. So that's like, okay, I'm going to go long here and target this imbalance. And if it distributes there, then I'm going to go short. If it doesn't distribute, I'm just holding my buy, right? So it comes up, it distributes, you know, you pay yourself obviously on the buy, and then it redistributes. And now you're targeting what? This new low, right? So, and then from there, the new range is what? This is lower low. This is previous lower high. This is your previous area of distribution. So below these lows, you could look for accumulation, reaccumulation, target the imbalance here. And then when it comes up in the bullish counter trend, you could wait for redistribution. If it presents itself, you go short, target a new low again, right? And then creates a new low. You start to anticipate accumulation below major lows. And again, previous area distribution and balance. But again, people are using trend lines. Look at, telling you, like, we create people's trend lines, and by the time people identify an opportunity, like they're waiting to sell it when it comes back here. But if we're in the buy below the low, you know, there's no evidence of distribution here, just, you know, collapse everybody who's selling too late. And now we just accumulated overall. So now this is the whole entire push down that swept liquidity, accumulated below the lows, and now we have this imbalance right here. So now above these highs, we can start to anticipate some distribution, redistribution, and our target is this whole entire push down. And now in the bearish counter trend at all these lower highs, you could be playing redistribution coming into this imbalance. And whenever it reaccumulates, then you're targeting a new high. And then it just repeats in the opposite direction now, right? You're just anticipating distribution above the highs, you know, looking at imbalances, following the bearish counter trend, reaccumulation, and just continues distribution above the high, you know, until it breaks, and then accumulation below this low, targeting this imbalance. If it distributes, you go short. If it doesn't, you're already in the buy, right? So it doesn't matter what chart you're looking at. Like, I want you just to like see that in any chart you look at. So anybody, I mean, first person to put a random pair in the chart, we could just look over it and go over this. S&P 500. Yeah, so I mean, look at this, right? So here we went higher high, higher low, higher high. We broke structure on the monthly, right? On the weekly, higher high, higher low, higher high. We broke structure here. You see this? We broke structure. We have this whole entire push up. And we have this imbalance right here. Boom. Right, but even here, above this high, we created a new high. And there was distribution above this high. Right, so let's start off with this higher high, higher low, higher high. It broke structure after sweeping liquidity. You have this imbalance, right? Price accumulated here, came into this imbalance. And what did it do in there? Look at this shit. You see it right here. Higher high, higher low, higher high, broke structure. See it accumulated, distributed above the highs and that imbalance. So you just, that's your redistribution. And then, you know, so, I mean, even in here, you could have done what? You could have waited for more evidence of redistribution because it just broke. And look at what happened. It did it again in here. So you could have played it like that to be a little more conservative. So again, like that's literally at the high, like, right? Like, see the line chart? Higher high, higher low, higher high. Swept liquidity. Broke structure. You have this whole entire push up. You have this imbalance that got left. Came in there. And yeah, it redistributed right here. Boom. So there's that. And then it came below these lows. I think just dumped. Right. So check this out. Because at this point, we had influence to break of this weekly. And then look at how it's fractal. It's like the same shit. Look at, like, I'm telling you, like, it's at the high, it starts with a smaller time frame that influenced the higher time frame break. And then, like, it's trippy because it's like the same thing, but on a different time frame. It's not always going to look exactly like it. But look at, right? Higher high, higher low, higher high. We swept liquidity. We broke structure, and we have this imbalance right here. All right. Like, I'm just gonna say, I truly don't believe like we're supposed to know this stuff, but here we are. So it comes into the imbalance, right? Created this low, comes into previous area of distribution in a bullish counter trend. Higher high, higher low, higher high. What do we have here? Redistribution. whole entire push up. Right. So you can short it here, stop above the high. We like to wait for, you know, better risk for reward scenarios, right? So, you know, it broke structure here, it played off from here. Definitely want to give yourself some room when putting your stop loss, because like it distributed here, you know, and then there you could obviously find a better risk for reward play. Like here, right? It broke structure, like you see it, like it did it, and then it came down, and you could have played any of these lower highs, and then, you know, just put your stop loss above the high. You can put it above this high, or whenever you see it moving down, you could just execute at these lower highs, and then boom. Right, you see it came back in there, redistributed here. So literally once that happened, you could have just executed there, stop above that high, and then boom. And then you're targeting what? You're targeting a new low. So look at what happened below this low. All right, the low got swept. And then what happened below the low?
Got swept again.
Got some accumulation below the low, right? Lower low, lower high, lower low, broke structure, boom. So here, you see that. So overall on this time frame now, it's lower low, lower high, lower low. We broke structure, accumulated below the low. So if price were to come in this imbalance or in here and accumulate, I'm definitely looking to go long, right? But we just came above these highs, and we're distributing. So I'm waiting for this imbalance down here to go in there. But yeah, you know, we did just distribute above these highs. You see, we just broke structure here. So if we were to come back into this area and redistribute, I'd be looking to go short. We're at this lower high. You know, if it closes above this high and comes down, could go long into that area. But I mean, there were just a lot of opportunities on the way up. I mostly, I mean, yeah, it's just like understanding price action first, and then like obviously applying it with the trades and participating on day to day or week to week. But across all assets, it's like the same. Like, look at this, right? Like you see, higher time frame is key. Like I'm telling, the biggest players are understanding higher time frame directional bias, and when you go down to the smaller time frames, it's understanding that within each of these expansions, like if it's a bearish expansion, there's lower lows and lower highs, right? And if it's like a bullish expansion, there's higher highs and higher lows. And you know, at the higher lows, you're waiting for reaccumulation. The lower highs, you're waiting for redistribution. Above the highs, you could play distribution. Below new lows, you could play accumulation, right? So here you see higher high, higher low, higher high, price broke structure, right? Came into this area, right? You see higher high, higher low, higher high. It redistributed here, and it just dumped, right? Filled the imbalance. Lower low, lower high, lower low, lower high, lower low. Created a new low, and it just reversed. I mean, there were a ton of opportunities in here. Like we shorted the shit out of this, and then we're in buys as well. And it's the same thing on Dow Jones. Like I'm personally still holding an entry from in here on Dow Jones. Like shit is mooning. But yeah, so like I have a short position right here, and I have a long position up here. I don't know what's gonna happen next, you know, but one of them is gonna work out. I mean,
I've profit.
Yeah, I've obviously paid over 90% of my position, you know, like because that 10% left can really go a long ways. But I mean, just look at this, right? It's the same thing again. Like, I want you to see, like, it doesn't matter what asset it is, doesn't matter what time frame. Obviously, you want to start with a higher time frame down, top down to understand like the overall direction and making sure you're going in the right one. Because yeah, higher high, higher low, higher high. And you see in here, just kept reaccumulating, right? Higher high, higher low, higher high, came back in, reaccumulated, higher high, came back in, reaccumulated, created a new high. And above the highs, right? Created the high. And then what happened right here? We broke structure, higher high, previous higher low, right? What do we have here? Right, this whole entire push up, the imbalance fill was literally right here. Right, we came into this area. What do we do? Higher high. So this was fire ass trade, right? Like I was like, damn, like, you know, honestly, like shorting the indices is kind of frowned upon for some people, but it's like you just got to play the game. You know, you got to like understand what's going on. So here, higher high, higher low, higher high. We swept liquidity, broke structure. Right, this is the weekly time frame, right? So once this happened, I'm like, I'm waiting here. Right, so it took 1, 2, right, on the third week for me to get in this trade. And it's retracing in a bullish counter trend, right? Because we just did this. Boom, boom, boom. So now price is coming up in a bullish counter trend, and we're waiting for redistribution to continue going short, right? So whenever price came into this area, right, it accumulated down here, which is some fire long opportunities, right? Nice buys in here, right? Let me show you, because we played this as well. Lower low, lower high, lower low. It broke structure, right? It came down in this area. All right, after broke structure, lower low, lower high, lower low, broke structure in here. So it just played in this imbalance, right? You could have just bought it here, stop loss below this low, and targeted the imbalance up here, or you could wait for evidence of more evidence of
Accumulation.
accumulation, right? So this was a play that I participated in, lower low, right? Lower high, lower low. It broke structure. Now I'm gonna show you guys, like yes, you could have played it right here, and it would have been great, right? Targeting that imbalance, playing it from this imbalance. You know, targeting, right? What are we targeting here? Previous area of distribution, you know, this imbalance right here. So all the way to that was a 1 to 10, right? And that's after it breaks structure, because again, we have the understanding that just because it does this doesn't mean it has to do this, right? It could definitely, right, do this, because below this low it could accumulate, reaccumulate, which influences that. So that's why whatever, it's about present price action, right? Current price action. Because I could have waited for this and it couldn't have played out. I could have just kept going. And I'm like, damn, I should have bought it down here. So that's why accumulation below major lows is super key, right? Whenever lows, you see, like whenever this high got swept, it just took a dump. And whenever this low got swept, it just flew. So you want to look below major lows and above major highs, right? Distribution above highs, accumulation below lows. So whenever this happened again, you see, like, it's like you're working your way into it, or like you're just, you know, you're just waiting, right? So broke structure here, boom, on the 4 hour. It came back on the 1 hour, right? Bearish counter trend, lower low, lower high, lower low, broke structure. That's your reaccumulation. So you could buy anywhere in here, stop loss below this low, right? Of course. Or you could wait for it to come in again on a smaller time frame. You're on the 15-minute. And you could wait for even more evidence of reaccumulation, which is right here. Lower low, lower high, lower low, broke structure, play the imbalance, stop losses now below this low, right? So now you could get a smaller stop loss. Where I played it was in here. right here. Because then it came into this area and it did it again. Look. Bearish counter trend, lower low, lower high, lower low, right? You see the imbalance right here. It reaccumulated here. So bought it right here. And this was shared live. Stop loss below this low now. Boom. Right? So same exact area. But it's just a little more patience, you know. So, you know, we were in that one. And then, of course, right, we know, okay, weekly distributed, broke structure. So now we're in this previous area of distribution. So we're trading on this bullish counter trend. Higher high, higher low, higher high. Whenever we create a new higher high in a bullish counter trend, an overall, you know, previous area of distribution that hasn't been mitigated out of yet, you can start to look for distribution above these highs, right? So when this high got swept, right, when we created this high, cool. This is where I played it. Higher high, higher low, higher high, broke structure. Right? Literally could have just executed off of the imbalance. Stop loss above that high. Targeting what?
The next low.
A new low. So targeting that low was a 1 to 25. I mean, it went for about a 1 to 30. But even in there, again, you could still work some stuff, right?
So by setting your goals for the new low, for example, you look on the daily time frame then to get the maximum profit out and trail your stop loss every time it creates a new, in this case, lower high.
Exactly. Right. So we'll go over this because the first targets are most important, right? Because here, right, it broke structure, right? Higher high, previous higher low, boom, we broke structure. We came back into this imbalance, right? You could have shorted it here, right? And this is where I shorted it whenever this happened. Higher high, higher low, higher high, and it redistributed here. So literally short here, stop above that high, and then it just so first target's most important. Because here it's very important to understand that didn't have to happen. What could have happened was this, right? That daily and 4-hour structure was still bullish. Higher high, higher low. So my first target was this imbalance, right? Because I know it could have just came here, reaccumulated, and kept going. But it didn't. So, you know, that's a 1 to 4, right? It makes sense, right? 1 to 3 minimum. But obviously, you know, it continued to go. And based off the weekly, you know, it just oh, can't even see that thing.
So when that lower high was created, right there, just, you know, right of the IPA, that's where when you move your stop loss to break even, or already in profit.
So the way I trail my stops is like this, and it doesn't change. So I've gone through so many different ways of like managing trades and stuff. This is what I do. So if I'm in a short opportunity here and my stop loss is like here or here, once it creates a lower low, lower high, lower low, I'm break even. All right. Vice versa, whenever I'm in a long opportunity here, whenever it creates a higher high, higher low, higher high, then I'm break even. So in this case, right, literally, once this happened, lower low, lower high, lower low, I went break even right there.
Okay.
So I literally just put my stop like right in front of my entry. Yeah, because what I used to do is I would trail my stop loss above the lower highs, but then I realized, all right, let me go back in here really quick, because this was another play that I took, right? So here we got the evidence of redistribution, right? Higher high, higher low, higher high. Boom, we broke structure. So that's more redistribution. But in here, right? So what I would do before is I would just trail my stop loss above pretty much every single lower high. But then you realize that a lot of times price will just accumulate to sweep some liquidity and then just redistribute to continue in that direction. So I like to just keep my stop loss like right in front of my entry because I know stuff like this happens. So here now we got the evidence of redistribution on the daily. So now it's like, oh shit, we're really gonna go for these lows, right? So here it's like, okay, I'm just looking for redistribution plays, right? So here, so far, like look at how simple this is, right? Like we just did this, we just broke structure, we accumulated below the lows, nice buy, came into this imbalance, we distributed above the high, we're in that, led to this break. So now we could look for this to target the low. And in here, we could look for more redistribution, right? That makes sense. So here, this whole entire push up is our previous area of distribution, right? We have this imbalance right here. So price came into that area and oh my goodness, what do you see? Higher high, higher low, higher high, redistribution, red button, stop above the high, target the same low, and there's another
So
one.
basically you just targeted and let it hit your take profit, or did you trail your stop loss into profit by time then?
So I set alerts on TradingView.
Mm-hmm.
My first alert is my 1 to 3. So wherever a 1 to 3 is, so 1 to 3, and again, first target's a new low. So if we just did this, lower low, lower high, my first target is a new low. So that's a 1 to 3. So for me, that's where I secure my risk. I pay myself my risk. So if I'm risking 1% and I'm up 3%, I pay myself 1%.
Okay.
Right. And then in here, obviously, once it came into this area, I mean, you already know, like there was multiple ways to play it. Whoa. Right, because it came into there and it did it again. Higher high, higher low, higher high, redistribution. So you could have played it like this, and then you could have kept playing all these lower highs. You see, came in, it accumulated below the low to come into here, redistribute, come into here, redistribute, come into here, and it just fell off the face of the earth. All right, so it's not always about like catching the tops or the bottoms. It's all about risk to reward, because you could catch a trade in here and you see lower low, lower high, lower low, lower high, lower low, lower high. Like, we won't go over this right now because of time, but just go study all these fucking lower highs and see how it just keeps distributing and redistributing. And also in here, right, whenever this happened, this low got swept, right? Whenever it accumulated in here and this area never got traded into, I waited for this, right? It broke structure, came in, accumulated, went long, and then it came below this low and accumulated here, reaccumulated, and it just blasted off. But I mean, yeah, that's how like you could just body every single movement. Like, I mean, that's why I only trade a few assets. Like I mostly trade, euro, pound, and then the indices. Like that's mostly what I trade. Like I trade CAD, gold, GA, GJ, you know, all that stuff. But I mostly just trade EU, GU, NASDAQ, and Dow Jones. Like those are like my main four. But yeah, and it's the same thing on any asset. So you could go apply this to any chart. Chris is going to be sharing a video with you guys, so I'd highly recommend to check it out and watch it. You notice it's the same thing over and over and over and over and over again. Like it's just training your eyes to see it and just getting those reps, you know. Like the best way, the greatest teacher in the world is your own personal experience, right? So you know, just stay consistent, you know, don't treat it like a hobby, treat it like a business, and it'll pay you like one, that's for sure. But yeah, so any questions, guys, please feel free. I got some time.
That was dope. I just love how, you know, once I discovered this with the imbalances and the way smart money works, that it always is the same thing. So guys, feel free to ask some questions. We got, you know, just for the ones that don't know Matt, he's been an educator with the company before. There's even still some videos of him in it. So yeah, feel free to ask some questions while we still on here, guys. It's a great opportunity, and I'm really grateful for your time, bro. So yeah, guys, feel free to ask in the chat or unmute yourself. Yeah, we can hear you, bro.
Okay. I had to just out really quick.
Oh, just paid some gratification, you know, gratefulness for you that you take the time of the day to jump on for the team here. But yeah, guys, feel free to unmute yourselves, type something in the chats, whatever is on your mind. Matt is a person that became financially independent through learning how to trade with IM Academy. So
look, guys, it's literally on my hand. It's accumulation, and that's distribution. And look at IM, you know. Yeah, so y'all are at the right place. Yeah.
I just love that I remember when you showed me that first time, you know, you guys got to know, I asked Matt about some trading advice, and he literally sent me a video of his hands like, so you buy here and you sell here. And I'm like, no way, bro. So guys, any questions? You know, I will be uploading the recording later on and posting it in the Discord, and I'll be sharing the video Matt was talking about with you guys. Just got to see the size of it and where I upload it.
Yeah, so I just got one quick question. It's just really clarifying like your targets. So you're really just looking for like the like volume, right? Like where those big candlesticks are, and then you're seeing what the like what the price action is doing from there, right? And then you go off of that.
Right. So pretty much whenever I'm shorting, my first target is this low, right? And the imbalance below it. If there's imbalance below it, I mean, that's my first target, right? Vice versa, if I'm going long, if it accumulates, comes back, reaccumulates, my first target is a new high. Because what can happen is price can literally accumulate just to distribute. You know what I mean? So yeah, first target is always where the retracement started, right? So if it accumulated, broke structure here, it created this high, comes in the bearish counter trend and reaccumulates, first target's always going to be that first high, right? Because that's creating a range, higher high, higher low, higher high. So then you can look for distribution above the highs. Yeah. And then if I'm shorting up here, my target is going to be whatever imbalance exists here, because it could just be coming back to reaccumulate. So it's like imbalance to imbalance, targeting highs and lows, all that stuff. Because then once this happens, my target is this high. right? And it's the same thing this way. Whenever it distributes, target a new low. If it accumulates below the low, targeting this previous area of distribution. If I see evidence of redistribution within that previous area of distribution, then I'm targeting a new low. So your previous entries become your next targets pretty much.
That's dope. So
That was
simple.
perfect, bro. Thank you. Thank you
Yep.
so much.
Anyone else? Giovanni, Brian, Julio, Antonio, you got any questions?
Yeah, we can do this, guys. We could do this again this upcoming week. I'm down. So.
Yeah, I'll let you know. Usually, I send you an invite to the Discord, so you need to see the day weekly schedule. So basically, what we do is we open up a Zoom call while we do the Angry Apes call, and then just stay on a little bit afterwards. And then Wednesday is the next trading call, and I think Thursday was another one that we planned. So yeah, that's the weekly schedule. And so just join the Discord, bro. That would be dope.
Okay. Dope.
Because then we can use Discord too. We don't need to do Zoom. Like the Zoom is just because of the Angry Apes call.
Mm-hmm. Cool, guys. Well, I appreciate your time. I mean, just feel free to let me know any questions or anything. Let's have a great week. You know, let's do it.
Really appreciate your time, bro. There's some guys in here that already prepared the FTMO. I already see it. And one of the guys, he's not on the call. He's been with us for just a little over 1.5 months. He tripled his account with real money.
That's fire. Yeah, I just had this guy in my group. 1 second, let me reply to this.
But yeah, that's pretty, I already know that Brian and Matt, they're trading S&P 500 and SPY with their friends. They've been catching some crazy trades. So I already see some good FTMO traders soon in here. I know Giovanni is putting in his work.
Yeah, I'm telling you guys, like literally give yourself a couple months and you'll see how consistent you are. It's crazy like how much the learning curve has been cut. Like I wish I like understood this like when I first started. I'm literally in my 5th year, and my first like 2 years definitely weren't the easiest, like trying to figure this out. But I literally sat and put thousands and thousands of hours like every week. I mean, not every week, it's not thousands of hours in a week, but like at my desk literally looking at charts all day, every day, all night. Not trading all the time, but just studying and looking. Like you really want to ask yourself, right? The way I started like really understanding was like, okay, why did price fall from here? Okay, why did price go up from here? Why did price drop from here? Why did price go up from here? Like I want to catch like every move, right? So it's like, okay, then within this move, like why did it continue going down? It's like, okay, what happened here? What happened here? What happened here? So it's like when you go in there and you look, you just start to see this and then you start to see this, so yeah, just stay consistent. I'm telling you, like the learning curve's been cut drastically at this point. Like I have this guy Adam. He literally came in 3 months ago. He didn't even know what trading was, never heard of it, nothing. And he just got funded 200 grand. So you could have whatever you want. There are no limits, they don't exist. Most people think they need to have something so that they can finally do something and then be something, right? It's like, okay, once I have $1 million in my trading account and I'm living this life like $1 million, I'm spending this, I'm doing this, whatever, like then I could consider myself $1 million trader. When no, in reality, you just gotta decide, right, who you want to be, right? So be that person, do those things that person does, and you will continue to experience everything that person experiences, right? So you got to be in order to become. So you can do it.
That was dope. I would say with those words, guys, I wish you all a great evening, afternoon, wherever you tune in from. And we'll see each other tomorrow on the next trading call. And thanks for your time, Matt. Peace out,
Yes,
guys.
sir. Appreciate you guys.
Yep, y'all clap easy.